In today's video, I will be doing a breakdown of a trade I took earlier today, and I will be basically breaking down why I took the trade, how I managed my risk, and how I know when to back out of the market. As today, as I will show you afterwards, it did turn into a sideways market, which it was very choppy and conditions were very bad after basically 9 o'clock. But I took the trade, entered it with 3 contracts. It was a continuation long trend trade, and it was a really good trade. In my opinion, we had the crossover of the green moving average. We had a close above the previous momentum shift, and it went in our direction. Took 2 contracts off at 10 points, took 1 contract off at 7 points for a total of 17 points on this trade. And in the breakdown, let's get into it. Here we are on the higher time frame. On the left hand side of the screen, we got the daily chart. On the right hand side of the screen, we got the weekly chart. On the weekly chart, as I said in the previous video, it was expected to shoot up, which it did overnight, but also due to the divergence that is happening, it did come back down and create this kind of a doji star looking candlestick. And the reason why it's kind of holding at this position on the weekly is because on the daily we have support in the fast moving averages. Over here on the weekly, we have a lot of air between the candlestick and the fast moving averages. So on the daily, if this does break the fast moving averages support line, we will see a drop back down to the fast moving averages on the weekly, and hopefully this should act as support and come back and shoot back higher to 703. If it breaks the 703 level, shoots back higher, we want to see it come back down to the 703 level, as right now the 703 level is acting as resistance. If it comes back down to the 703 level after it breaks that line of resistance, the 703 level should act as support, and it should reject off the support line and shoot up higher. And right now, the reason why the market was in terrible conditions was because of the divergence that is playing out on the weekly and on the daily. So we had a little pullback today, which we had one good long trade in the morning. If you didn't take that long trade in the morning, you would have not had another good signal throughout the day, as every time you think it's going to go higher, it's going to go lower. Every time you think it's going to go lower, it's going to go higher. That's how a choppy sideways day works, and we had that after 9 o'clock today. That's why the only trade I took was in the morning, and it was a really good 17-point trade, as my strategy always captures 10 points, or always captures 10 points. You're guaranteed 10 points if it hits that 10-point mark. And let's get into the lower time frames. Here we have the 15-minute on the left-hand side of the screen. On the right-hand side of the screen, we got the 60-minute. 60-minute, our opening range of the day is 583 to 492. As you can see, at 7 o'clock to 8 o'clock, the candlestick or price suddenly broke below 492, but it kind of held at the 444 level, shot back up into the fast moving averages, and then the fast moving averages kind of acted as support and resistance in the fast moving averages. If you look at price, it kind of stayed in the fast moving average until it broke below the fast moving averages and the green moving average, and kind of went back into it. And you have a lot of wicks. We only have a lot of wicks and very tiny actual candlesticks. You know, it was a very choppy day. As you can see that the next candlestick is being engulfed by the previous candlestick, which is not what you want. And it's kind of like a funnel going downward, which is indicating it's very choppy. So that's the 60-minute, that's the 15-minute. We have the 1 minute on the right hand side of the screen, 2 minute in the middle, and 5 minute on the left. And on the 1 minute, we took the trade at 482 after we saw confirmation on the 2 minute and the 5 minute. And on the 1 minute, we saw it was gonna cross over on the green moving averages, so we took it a little bit too early, kind of front runned it, but it worked in our favor. Usually the trade we would have taken it over here, not at 817, we would have taken it at 820, but took it early, doesn't matter, it still worked in our favor. Kind of a mishap on our side, but still worked out, and it retested on the green moving averages, shot back up, and then it shot up into our 492, which we took 2 contracts off, and we let one run, put it at 7 points. It came back down. The reason why we put it at 7 points is because we started getting big wicks on the candlesticks on both sides, on the bottom and on the top. So we were kind of managing our risk in a sense that we captured the most points without it running back on us, and we did. We captured 7 points on our last contract, and it kind of based around, went back up, and shot back down. If we would have held on this trade, it would have been a break-even trade, but we have our strategy where we go in, take 2 off at 10, leave 1 to run. So that's why this trade worked out well, and that's why every trade that goes in the trend should work out well. So we had the energy as well on the 1 minute, we had the energy on the 2 minute, and the energy on the 5 minute. So we had everything going in our favor. Took the trade early, doesn't matter. We saw the retest. The reason why we held in is because of the retest in the green moving averages, so we weren't too worried about it, and it went in our favor. It doesn't matter where we would have got in, to be honest. If we got in after the retest of the green moving averages, we still would have gotten at the same price point. And on the 2 minute, we had the fast moving averages cross over the green moving average, which is an indication of our strat. We have a entry signal on the oscillator, and we have momentum or energy on the 5 minute, as it did close above the fast moving averages. So everything went in our favor. Took the trade, it worked out beautifully. And let's get into the choppy part of the market. So later in the day, the market started having these big bounces off the same zone we did get in. So this zone we got in acted as support, and it shot up, went back down, shot up, went back down, shot up, went back down, and it started basing around the moving averages throughout the rest of the day. As you can see, it started moving around the moving averages. The moving averages were all basically straight. There was like no action at all whatsoever. We had a short, but we're not looking for shorts, we're looking for longs, as we are still in an uptrend on the weekly and daily. And it kind of just bounced around the moving averages. No clear signals of where the market wants to head. Every time you think it's gonna go higher, you get in at a nice point right here, it comes back down on you. Every time you think it's gonna go lower, you get in at a nice point here, it comes back down on you, and it just did that the rest of the day. Same over here. It was just really choppy and really sideways market. It was, you had your one good trade over here, really nice long trade. If you didn't catch this, you could have got in for another long over here, but it wouldn't have been as good as the long we first took at the beginning of the day. So we got our 17 points, watched the market, had no other signals, and stopped trading for the day. If we continued to push it throughout the day, we would have lost our money. And that's one thing, is you need to know when to not push it, when to back off on the market. And this was a perfect day for an example of that. If we look at the 1 minute here, we see that it was very choppy. Look at the 2 minute, same thing, very choppy. You had no clear signals to match anything up with the 1 minute, 2 minute, and even the 5-minute. It was very choppy. It was like nothing was going anywhere. So this is a clear example when not to push it. And when you want to push your trades are over here. We have the 1 minute from today on the right hand side of the screen. On the left hand side of the screen, we have the 1 minute from Friday, which was one of the best long trended trades and days you would have had in a long time. But if you look at the difference between today and Friday, you can see why you would want to keep entering trades and keep pushing it on this day, is because it always went up. You had all the energy going in its favor, yet all the re-entries, as I explained in the previous video. If you watch it, you will see how I played this day exactly, and you will see why you really want to push it on a day like this. But on a day like this, if you push it, you're going to lose your money, because look how choppy it is. It's just, there's no moving going on at all. You're not going to make any money. There's no volatility today that happened. It was a very slow and choppy day. Not that great for longs, but we already explained why it was like this on the higher time frame. And that's a difference between today and Friday. Is this is a day you really want to start pushing your contracts. You really want to start taking trades. Today is a day where you take your one trade and you're done. You don't look at the market again. Well, you keep looking at it, but you're not going to take any other trades. And that's the difference between today and Friday, is where the strategy really shines, and where the strategy still shines in a sideways market. As you can see, I still made my 17 points in a sideways market, meaning my strategy that I use still works in a really crappy market. So that's one thing to keep in mind, is trend trading is one of the best trading styles you can do, because you're always going to be on the right hand side. You're always going to be on the right side of the institutions as well. So wherever the institutions are going, you're riding the waves with them. And yeah, that's basically the trade I took, the reason why I took it. And you don't want to counter trend trade. You really don't. If you counter trend traded today, you would have had very little, points. Like it doesn't work. Not worth it. Like, you could have taken the short, but you would have had basing out, then it would have came back down, basing out. If you really held on it would have came back and taken you out. Over here, you take the short, it comes back, it's shorts would not have worked today, would not have worked on Friday, because we're still in an uptrend. But that divergence might kick in, so shorts might start working out, but we don't know until we truly see the divergence play out. But that's basically the trade I took. For risk management, like I said, we entered the trade, we took 2 off at 10 points. That's standard for my strategy, and we leave 1 at break even. And like I said, we saw the wicks, we saw it starting to slowly have less volume in the candlesticks, so we decided to really trail up. And as you know, it came back down, took us out, but started basing out, came back up and went all the way back down, came back up, went all the way back down, and there was less energy and less energy going on. So we got in at a good time, at the right time, and we got out at the perfect time. And yeah, so you need to know when you're trading when to back off, because today, like I said, you would have pushed it, you would have lost your money. Friday, you would have pushed it, you would have still made hell of a more money. And today was a day where if it goes higher, it's going to go lower. If it goes lower, it's going to go higher. It chops you out, and we trail because we like capturing our profits. We're not gonna let it run to like $90, or if you're doing NQs $900 and not capture anything and let it come back and take you out for a loss. No, that's not happening. That's why risk management is always key to success in trading. You don't have it, you're not going to succeed. So yeah, We don't counter trend trade. It's still an uptrend, but beware of the divergence. It was a continuation trend. Unfortunately, we did not get in the pivot, but if we did, it would have been like a 20-30 point move, but we got in at the continuation, which is still good. Price was not respecting the moving averages. That's why it was all choppy, bounced back and forth. I showed you on the 2-minute and the 5-minute, same thing happened. Price chopped around, wasn't respecting the moving averages. Price was just kind of on its own. And yeah, that's basically it. Took the trade, saw it's a sideways market, didn't push it, didn't give the money back. We kept our profit. And keep in mind that even though our profit was $44, it's $44 on MNQ, 17 points we captured in total. And don't forget, NQ is 10 times MNQ. So if this was an NQ trade, it would have been $440, probably even more. I'd say around $550 to $600 would have been the trade today if it was on NQ. But we're not doing NQ. I'm trying to stay consistent with points. I'm trying to making sure my strategy works, and I'm always consistent with 17 points, so that when I do go over to NQ, I'm always consistent with around $500, $600 a day. But money shouldn't matter in trading. The points should matter in trading, because if you're not consistent, if you don't have good risk management, you're not going to be profitable as a trader. And if this was a 10 contract NQ trade, this would have been $1,800. So keep that in mind. The only way to truly increase your money when you have your consistency in points down is to increase the contract size. And that's trading, That's how you make your money in trading. You first have to be consistent with a strat. You can go in sim, you can go in demo, and as long as you're consistent, you can translate that over to real money. And as long as you're consistent and you have good risk management, you're always going to be profitable as a trader. There are going to be some days where you lose, but your winners should always outweigh your losers. That's good risk management. And that was basically it for the day. And yeah, like, subscribe, and I will see you guys on the next video.